Hi, I'm Dave Young from CryptoVest.com with another one of our explainer videos, going deeper into the world of security tokens and what comes next in the world of cryptocurrency. Today, we look at the first market that everyone's always shouting about for security tokens, real estate. Everyone's always saying that a digitalized, tokenized solution can bring about a massive change to a $1 trillion industry. The benefits always being listed are greater liquidity, cutting out the middlemen and their fees, more economic admin, more streamlined systems with smart tokens, and 24/7 markets that allow access to a more global audience. What is the current system? REITs. Now, if you're not buying the property outright in the current investment climate and you're investing, you're probably going to be using an REIT, a real estate investment trust. These have been around since the 1960s in America, where they were introduced, and they've proliferated out to 35 other jurisdictions with similar legal structures. They come in a variety of different flavors, from exclusive, high-wielding private clubs through to sector-specific, to SEC-approved, publicly traded funds that you can go and buy and sell on the exchanges. But these guys have a better risk-spreading factor and obviously lower returns. Now, just as there are many different flavors for the existing market, it'll be the same for the security token markets. It's not going to be a reinvention of the market. It's going to be a digitizing, a tokenization of the market to bring around improvements of greater liquidity and more efficiency. What is the illiquidity discount? The common behavior in funds is that the greater liquidity, the lower returns. So the higher returning trusts, they have fixed periods, and if you want to get out early or you need to get out in a hurry, you're going to have to take a hit. You're going to meet the illiquidity discount, which means you could be selling sometimes up to 30% below the price to get your cash in your hand. Now, the hope is that decentralized exchange, smart tokens, and with smart contracts will allow a more liquid market and eliminate or minimize this illiquidity discount. The layer cake, too many mouths to feed. When a real estate fund or a project goes forward, usually it's given out to big players who often split it into smaller packages, repackage it, add some profit, add some marketing, and sell it on again. This can happen once, twice, or even more, and this adds margins. Then you've got the uneconomic admin systems which take their thing. You have a lot of people feeding at the trough. Now, the hope is with a digitized token and smart contracts that you can cut out a lot of these stages and just do it in one go, therefore having a lot less mouths to feed. Who are the first movers? The market is flooded with ICOs, giving different solutions, offering for different money, different ways of dealing with it. But maybe it's better just to look at who's actually got something on the market, because I keep reading in the press about these great things, this is happening, that's happened. So delved into it a little bit more and take a look at what's happening now. Block Square and their prop token, they say, well, they've actually got a working prototype. They've done it with NDP developments and it's all good. The only trouble is it's a single parking space in a tech center in Ljubljana in Slovakia. So maybe a little bit more work needs to be done there. Propeller and their partner Fluidity and a famous TV broker from Manhattan, Ryan Serhant, have been in the press lately with a Manhattan 12-story building that's completed, saying they're going to tokenize it completely. It's all very interesting, very promising. It's still at the PR stage, at the pre-marketing stage, so there's no actual proof of concept for it working. So it'll be another question exactly how long it takes to move forward. Swiss Real Coin from Swiss Real Estate, they were powering ahead. They're putting together a portfolio with their Swiss coin. It's all looking very good, but just at the last hurdle, they say they're hitting a lot of legislation problems, compliance problems, and they're delayed till the fourth quarter. Well, it is the fourth quarter, so hopefully they'll be happening soon. Brickblock from Germany seems to be at alpha beta testing stage on their website, not much more. Then we have Templum Markets with their Aspen coin. Now, these guys are already registered with SEC and approved broker-dealer. They're going through Indiegogo. Indiegogo want to break in big into the market and show everyone STOs and stuff like that on their platform, not actually get involved and take a 2.5% marketing cut on top. Well, they put up Aspen Coin. They've got this Aspen resort for skiing, health, spa and everything else. They wanted $18 million. It was accredited investors only, millionaires, under the Reg D exemption. It closed on October the 1st. Don't know exactly how they did. But if you look a little bit deeper, it says within the offering there's extremely limited liquidity going forward. And it says that it will be based on an Ethereum token and they will pay out dividends from the Aspen REIT. So really maybe it's not that groundbreaking at all. Then we have Polymath with Block Estate, big announcement mid-September. They're going to use their ST20 special token. They're going to do lots of stuff, but it's just an announcement. Nothing firm and concrete to see moving yet, no compliance. So as you see, the world of compliance real estate has still got hell of a way to go. It's very complicated. A lot of players are rushing into this space. People are trying to get moving. But how long it takes to get actual real liquidity, real movement in the market is an open question. I'm Dave Young from CryptoVest.com, and this was another of our explainer videos about smart tokens and what comes next in the world of cryptocurrency. If you like what we're doing, show us some love. If you want to keep on top of the game, subscribe to the channel. Stay current, stay valid, stay tuned. Till next time.